Well, I can already hear them now. Paul Krugman and Justin Wolfers with his stupid mop head. Uh, Man needs a haircut. He has no dignity as an economist. I can already hear them out there telling us about what Neanderthals, people like me, or Peter Schiff, or really anybody else with a brain, who said, hey, obviously America's in a recession. We had 2 consecutive quarters of negative GDP growth. We're in a recession. So it was essential for the regime's narrative that Q3 GDP prints positive so that they could not only say we're not in a recession now, they could say, you know what, we weren't in a recession then either. This idea that 2 consecutive negative quarters is what marks a recession is stupid, and nobody ever believed that, and it's made up, even though everyone accepted it before Biden was president. And so it was only a matter of how they were going to get to this number. But this number being positive was pretty much a foregone conclusion. Nobody doubted that from the beginning. They weren't going to let this be another quarter of negative GDP. So, were they able to fake more economic growth? No, kind of hard to fake that. All they can do is play with how they add the numbers up. So what they did was, to calculate real GDP, you take nominal GDP and you subtract inflation out of that, because GDP is just a sum of essentially sales in the country, and if sales go up because of inflated prices, but you've got essentially the same amount of economic activity going on, you don't want to count that as growth. So the idea is to get real GDP, you add up the GDP, and then you subtract out the inflation. Well, all they did was just lie about inflation. The Bureau of Economic Analysis at the U.S. Department of Labor, I believe it is, or whatever, they have Bureau of Economic Statistics. I get all these silly little agencies and subgroups confused, but the important point is they're the federal government, and they decided that we had a nominal GDP growth of 6.7% and only like 4.1% inflation. Therefore, we have 2.6% positive GDP growth. I'm not kidding. That was what they came up with. They said the PCE deflator, which is the metric that they use. Of course, they don't use the regular CPI because I guess it would, they can't manipulate that as much without people noticing. They already manipulate it astronomically. CPI is much lower than what inflation actually is. And so all I did was I taking their nominal GDP number for granted, I went to Shadow Stats and looked up, okay, what's inflation been this year? And on Shadow Stats' website, I didn't even have to look at the granular data. I just looked at the rough chart. That's how big the difference is. I just looked at the line on the graph, and the actual CPI, the way that it was calculated back in the 70s and beforehand, for 2022, the accurate CPI number has been over 15% for the whole year. So let's just be generous and assume that for all of Q3, it was only at 15%. Now, in actuality, it was above 15%, but let's just say it was 15%. So you take 6.7% nominal GDP growth, you subtract 15% inflation, what do you get? You get negative 8.3% economic growth. So, no, we're not just in a recession. We're in a depression. You don't get to lie this hard and have people take you seriously. Okay, China might get away with that to a certain extent, and America gets away with it to a quite large extent, but this is too ridiculous. They've changed everything. They're not even willing, they're so bad, they're not even willing to use their own understated CPI metric to deflate the GDP. So yes, as far as I'm concerned, this is a third consecutive quarter of negative economic growth. It's way more than negative. It's extremely negative. It's near double-digit negative. It's abysmal. Our nominal GDP growth should be well over 10%, considering as much inflation as we have going on. The fact that we have single digit, not even upper single digits, mid-single digit real GDP growth, which, by the way, in Q2, when the Bureau of Labor Statistics admitted that we had negative GDP growth, that we were in a recession, the nominal growth back then was 8 point, I think 8 point something percent. And so nominal growth has gone down. But inflation, we're supposed to believe, has gone down even more. Inflation is going down. So that's why our GDP is going up. That's what they want us to believe. Inflation is contained. Inflation really was transitory all along. That's the narrative you have to believe in order for us not to be in a depression with 3 consecutive quarters of negative economic growth. Am I the only one seeing this? Because that's what I did. That was my first thought when I saw, okay, positive 2.6% GDP growth. I thought, okay, how did they get there? What was the deflator? And I went in and looked, and it was only like 4%. And I said, that's nonsense. But I'm not seeing other people say that. I don't know. Am I crazy? Zero Hedge was attacking this number, saying, well, the only reason why GDP is positive is because of exports to Europe, because Europe's shooting itself in the head. They said, oh, well, the Europeans are having to import so much from America now that dragged our, that helped out our trade deficit, which kept GDP overall from being negative. Which may very well be true, but you don't even have to go that far. All you have to do is, knowing that inflation is nonsensical, take whatever nominal GDP the Bureau of Economic Analysis came up with and subtract the actual rate of inflation. If you've got double-digit inflation and single-digit nominal GDP growth, guess what? You've got negative GDP growth. It's that simple. On top of that, we have the tech bubble, which is bursting spectacularly. We have first Zuckerberg became, how should I put it? He's lost more money than any man in human history. He lost $100 billion in net worth. That's never happened before. And the reason why is that there was this massive tech bubble. All these guys who own tech stocks, the tech oligarchs, became massively overvalued in terms of net worth, Elon Musk included. And now that the tech bubble is collapsing, all of these guys are losing net worth that, frankly, they never had to begin with. Mark Zuckerberg was never as rich as he officially was. There was no real value in Facebook, or I'm sorry, Meta. And it was only a matter of time before it reached, normal valuations. And by the way, it's not there. It's nowhere near there. Neither is Amazon. Neither are any of these tech stocks. They're still way overvalued. They're not being valued currently based off of rational metrics, price to earnings ratios, none of that. And so today it was Bezos' turn. J.R.R. Tolkien got his revenge on Amazon for the absolute insult, to put it lightly, that was the Rings of Power. And he smited old Jeffy Bezos by tanking Amazon stock 21%. And you know what? This fake GDP number that came out today, it only empowers Powell further to continue to cut rates. You know what? This GDP report today was so fantastic, Powell might just cut by 100 basis points to celebrate. Now, do I think he's going to do that? No. But I don't think he's done cutting yet. I think that these fake economic statistics are giving Powell every excuse he needs to continue cutting. Or, I'm sorry, to continue hiking rates. I probably said cut by 100 basis points earlier. I meant hike by 100 basis points. Speaking of the Fed and rising rates, George Gammon has an excellent video out on his channel about the real estate market, thinking through the results of rate hikes and how, even though we don't have as many adjustable rate mortgages this time around, and we're not going to have the same kind of forced sales of people who are having to short sell their houses because they can't make the balloon payment like we did back in, 06, 08. Gammon argues that you're still going to have people who are rushing to try and fire sale their homes because of their declining 401ks and retirement accounts, which, frankly, is something I'm ashamed I didn't think of yesterday, because I talked about this before of how I thought it would kill demand, because I think demand for Florida real estate, particularly areas like where I live, where it's large concentration of retirees, all those people are only able to spend so much on their retirement because of the rising equities and bonds that they have invested in over their lifetime, which are now evaporating before their very eyes. And so I think Gammon's thesis is basically that these people, they own these assets, their assets are tanking, and now also their house is going to start tanking, and they won't be able to afford it because they bought these great big houses that they pay for using their investment income, pay the taxes, the mortgage, or whatever. And they will not be able to make those payments since their income is a product of the equity markets. They will have to sell, downsize, and get out from under those houses, and that is what will start, the real fire sale in real estate. And of course, the demand is not there to buy all those houses. The demand's gone already. And so there's a source of inventory other than just the new construction builders who are going to have to unload their inventory. So with all that said, I will see you folks back here tomorrow.